What a weekend. I mean, if you blinked, you seriously might have missed one of the craziest turnarounds in the crypto market this year. We saw a week of absolutely brutal selling, and then, suddenly, the market just snapped back. Today, we're diving into how it happened, why it happened, and, of course, what could be coming next.
Okay, let's just jump right in. Look at this swing. On Friday, Bitcoin was flirting with 7-month lows, hanging out around $80,500. And let me tell you, the mood was grim. But then, by Sunday, it had absolutely skyrocketed to over 87,300. It just erased a massive chunk of the week's losses in less than 48 hours. This wasn't some slow crawl back. This was a powerful, V-shaped recovery.
Now, to really appreciate this bounce, you have to understand the sheer panic that came right before it. The entire market was completely gripped by this thing called extreme fear. You had traders dumping everything, leverage getting totally wiped out. It really felt like the floor was just falling out from under us. And then, right when it seemed like it couldn't possibly get any worse, boom, the buyers stormed back in with a vengeance.
So, just how big was this comeback? I mean, really. Let's crunch some numbers here to get a sense of the incredible scale of this rebound.
This rebound pumped billions back into the market, and it happened in a flash. The total crypto market cap shot up to $2.94 trillion. That's after a nearly 3% jump in just 24 hours. And that puts the entire industry so close to that huge $3 trillion psychological level.
But here's where things get kind of weird. Even with prices shooting for the moon, the market's emotional state, what we measure with the Fear and Greed Index, was still stuck at a 12 out of 100. That is deep in extreme fear territory. It tells you that, yeah, the price action was great, but the feeling underneath it all was still incredibly fragile. Nobody was celebrating just yet.
And listen, this recovery was not just a Bitcoin story. Not at all. Sure, Bitcoin and Ethereum posted some solid 3% gains, but some of the altcoins, they saw truly explosive moves. XRP jumped nearly 7%, and others just surged by double digits. This shows that money wasn't just trickling back into the big names, it was flowing across the entire market. You know, maybe the biggest signal of all was this massive 88% drop in liquidations. Liquidations are what happens when traders with borrowed money get forced to sell, and that can create this awful death spiral of selling pressure. So seeing that forced selling suddenly slam on the brakes, that meant the fire was finally starting to run out of fuel.
But a rebound this sharp doesn't just happen out of nowhere, right? So what was the secret sauce? Next up, we're going to unpack the 3 key things that came together to create the perfect storm for this wild recovery. So the bounce was really a 3-part story. First, the sellers just ran out of steam. They got tired. Second, you had fresh money starting to pour back in through all these new investment funds. And third, the wider global economy just chilled out a little bit, giving investors the confidence they needed to jump back into the game.
So analysts were throwing around this word, capitulation. And what that basically means is that the panic selling got so intense, we're talking over $500 million in liquidations, flushing out all that leverage, that there were just very few people left who were weak enough to sell. This kind of seller exhaustion is a classic textbook sign that a market might have hit its low point.
And it wasn't just that the selling stopped, new money was actively flowing in. After bleeding cash for over a week, Ethereum ETFs finally saw money coming in. New XRP ETFs pulled in over $100 million on their very first day. And maybe the most important piece of all, the supply of stablecoins, the digital dollars used for trading, rose to $86 billion on exchanges. That is a ton of firepower just sitting on the sidelines, ready to be deployed. Finally, you gotta remember crypto doesn't exist in a vacuum. This recovery happened right as the stock market started to stabilize. Plus, the odds of the Federal Reserve cutting interest rates in December shot up to over 70%. A calmer, less risky world just gave investors the green light they needed to move back into something a little more speculative, like crypto.
All right, but let's be real. This market isn't just driven by charts and data. It's being shaped by huge companies, major institutions, and some very real-world threats. So in this section, let's look at the powerful forces at play.
You can almost picture the crypto market as this giant tug-of-war. On one side, you've got these incredible positive forces. New investment products are launching all the time, huge tech companies are adding crypto payments, and venture capital is just pouring in. But on the other side of the rope, you have these serious threats. Regulatory crackdowns, major hacks, and illicit activity that can really shake people's trust in the whole system. And the list of big players doubling down right now, it's pretty darn impressive. You've got Grayscale launching new ETFs, Coinbase is expanding its trading, Block is weaving Bitcoin's Lightning Network into its payment systems, and major investors like ARK Invest are actively scooping up crypto assets. Every single one of these moves helps build a stronger foundation for the market, and it's basically a huge vote of confidence from Wall Street.
But, on the flip side, the challenges are just as real, and you can't ignore them. Regulators like the IRS are cracking down hard on tax evasion. We're seeing huge criminal investigations, like one in the UK that uncovered billions being laundered with crypto. And the constant hacks in decentralized finance, or DeFi, are just a painful reminder of the security risks that are still out there.
You know what this table really shows, though? It's the long-term optimism in this space. Despite all the wild price swings, venture capital is still pouring in to build the future of crypto. We're seeing massive funding rounds for exchanges, for new blockchains, for financial platforms. It's a crystal clear sign that the smart money is betting that this industry's best days are still ahead.
Okay, so this all brings us to the one big question, the one that's on everybody's mind. Where do we go from here? Is this the start of a new bull run, or was this just a temporary blip in a bigger downturn?
You know, there's actually a technical term for what we just saw. It's called a capitulation relief rally. It's a specific pattern where prices bounce back hard after extreme selling, pretty much just because the downward pressure is exhausted for a bit. And the key word there is temporary. It is absolutely not a guarantee of a long-term recovery.
So for all you traders out there, the key levels to watch for Bitcoin right now are these. Just holding strong between $85,000 and $88,000 would be a really positive sign. But the real test? That's $90,000. A solid, sustained break above that level could be the signal that this rally has legs and might just be the start of something much bigger.
And that, my friends, is the trillion-dollar question. Have we truly found the market bottom here, paving the way for a real sustainable recovery? Or is this just a classic dead cat bounce? You know, a short-lived price spike before the market rolls over and heads even lower?
And guess what? We might get our first big clue almost immediately. All eyes are on Monday with the launch of several new institutional ETFs for coins like Doge and XRP. Analysts think these could pull in over $400 million in fresh cash. So will that be enough to fuel the fire and push the market higher? Or will this whole rally just fizzle out? It's a total cliffhanger, and the next 24 hours are going to be critical. Thanks for tuning in.